Well, S. Naren is Executive Director and CIO, ICICI Prudential AMC. He's one of the largest money managers in the country. Naren, good morning. Great to have you with us here. And I should say congratulations first up on that. I mean, I think investors are going to be happy. You're going to be around at the helm of things. So it was good to see that. Naren, what's your sense? The budget reaction and what will the market do from here? Lots of opinion that we've gotten, pragmatic, etc. But this STT thing maybe is just kind of, for now at least, overshadowed everything.
I was involved in stockbroking from 94 to 2004. Somehow I've not seen retail investors make money in derivatives. But the way markets have reacted since yesterday is as though the retail investors have made a lot of money in the last 25 years in derivatives, which has never been the case. In fact, the regulator prepared a long document showing how much money was lost in derivative segment. But the market reaction since yesterday is only to do with STT, because everything else in the budget was fantastic. Because if you look at the fiscal deficit, it is in order. Overall macro is in order. And government is thinking, how can, one of the biggest challenges for India is it was not seen as a country which is connected to AI. So they did come up with this data center tax concession to propel investments in data centers. We've always been supportive to any tech trend in IT services, in cloud services. Everywhere we've been a supporter. So I think in AI also we have to be a supporter and create an AI services boom. So I think that step was a step in the right direction. But the market is looking at an area where only retail has lost in the last 25, 30 years. And if you increase taxes there and reduce volumes there, it's beneficial for retail. They have not touched STT on cash equities. So that is the challenge at this point of time. How to convince the market that actually this is a positive step for most retail investors, bad step for HFT traders and those kind of people. So how to convince that is one of the challenges, I guess, for the government.
This, from your fixed income team, the gross borrowing number, yields are higher. Naren, any thoughts there?
Yeah. See, actually, they have budgeted for a very small number in small saving schemes. If you look at the way small saving scheme collections have been this year, it has been fantastic. So if you assume that small saving scheme collections will be very low and prepare a borrowing program, today I would say is an indicator of over worry, because at the end of the day, small saving scheme collections have been going up. And if you continue with that kind of trend, you're going to see a situation where the gross borrowing program, the net borrowing program is what matters, not gross borrowing program. And the net borrowing program is likely to be lower than what is budgeted, because the small savings scheme will take a much bigger share of the borrowing program. So while today's yield increase was something which my colleagues in fixed income had predicted, our view is that this is possibly not a score to worry, because the overall fiscal of the central government is very comfortable. It has been one of the best in recent years. And it's only the state government where we don't have complete comfort. But in central government, we have complete comfort on the way the fiscal management has been.
Got that. Naren, hi, this is Rima here. We'll get to the budget nitty-gritties in just a bit. But before that, wanted to get your view on the ICICI Mutual Fund's decision to resume subscription in the small cap fund. This is after suspending it for nearly 22 months. So take us through that decision. And do you think small caps will start outperforming the large caps, and all those worries about the froth? Has that settled?
See, we are always worried about euphoria, and we don't know how to react to euphoria because we have a comprehensive product range. So we felt that euphoria is completely off in small cap. There is no such euphoria in small cap. The euphoria had shifted to precious metals, actually. And so we said that even if we open it, there is no risk of, euphoric money coming in or anything like that. From a market point of view, our view has been fairly static. We believe that most asset classes are costly at this point of time, and the only way to invest is asset allocation. Obviously, equity is a trifle more attractive than a year back because markets are down in small cap, and if you ask me. Slowly, the valuations are becoming slightly more attractive. So obviously, you can have a slightly higher allocation to equity compared to a year back. But even today, markets are not cheap across the board. And we find it difficult to identify good thumping the table buy ideas in equity with big upsides at this point of time, even today, across market cap. But clearly, the euphoria and small cap, we are far away from euphoria and small cap. If you look at the number of stocks which are touching new lows in small cap each day, it is so much higher than anything else. So we felt, as an investment institution responsible for public money, we thought the time for closing the scheme is over because there is no longer any euphoria.
But it's not a signal, Naren, right, that you are now gung-ho on the small cap space. And I mean, say if you get an inflow of 10,000 crores in one shot, will you deploy immediately? Because you're seeing those kind of I mean, it's a theoretical question. I'm exaggerating to just make that point, just to get that clarity.
We are not gung-ho. We are
no, in that space, in small caps.
We are gung-ho on areas like specialized investment funds, for example. We are gung-ho on asset allocation. But these are all more defensive ways of investing than pure equity at this point of time. And that is what we have been trying to do at this point of time, that where we are gung-ho, we try our best to collect money. But and that is the situation. For gung-ho, you need lower valuations. There's nothing wrong with the macro. There's nothing wrong with what the government could have done in the last 1 year, like lower GST, lower interest rates, etc. But the fact is, valuations are high. And even today, many of the companies are able to easily raise money, even if the valuations are high. So we're not yet in that gung-ho moment where we can say, invest all your money in equity. That kind of situation we aren't in.
So that small cap signal is basically getting ready for whatever happens, right? I mean, that opportunity whenever it comes.
Exactly.
Okay.
Exactly. And there are investors, who wanted to invest more than the amount that we had specified. And we said that it was proving to be a bit difficult. And that was the reason why we said, let's open. There is no gung-ho moment.
Okay. Hi, Naren. Good morning and good to see you. When, 2 years ago, when you took that bold call that precious metals was the way to go, when there was euphoria playing out in small and mid caps, that was bang on. Current asset allocation, how does it change things? Given that small caps have gone through a big price correction and large caps have gone through a time-wise correction as well. So give us the strategy right now. And also with regard to metals, precious as well as industrial metals, how far away are we from that peak or euphoric stage?
Clearly we are in euphoric state. The only challenge is that how do you value precious metals? See, when you look at equity market, there's a value. You look at price to earnings, you look at price to book, you look at ROE, we look at market cap, etc. How do you value precious metals? But purely from a behavioral point of view, we are seeing euphoria in precious metals. Honestly, we don't know how to value precious metals, but we do know that it is riskiest asset class at this point of time. So we tell people, if you want to put money in precious metals, do it only through the multi-asset route. Because whatever we have been seeing in the last few months is completely euphoric. The challenge is people want us to get the top exactly right. It is hard. It is impossible. I mean, it is impossible for us to get into a euphoric framework when that euphoric top will be exact price and then come. Our experience of 2007-8 was when something becomes euphoric, you decide to become cautious irrespective of how much more it will go. And that has been our framework. So over the recent past, we have been continuously telling people, don't invest standalone in precious metal ETFs or fund of funds. Focus only on multi-asset so that you're not investing big money in precious metals at this point of time. A framework that we have is that whenever any asset class gives you triple-digit return, that is more than 100% return, that in a year, you have to be careful in that asset class. And that asset class is silver at this point of time. So that's what we've been trying to do, but people want us to guess correctly. An asset class which can never be guessed correctly, because you see the daily moves in silver, it is impossible for someone at ICICI Prudential to guess daily movements in silver, which is a global commodity, and how it will move up morning, evening, night.
No, absolutely. Because, I mean, I remember, Naren, we spoke last time. This was in the new year. I mean, I think the first couple of days of the new year. And you said, well, I think that shift has some, you looked at ratios, etc., right? I mean, Nifty to gold, Nifty to... and that had moved too extreme, and you said, well, now it's time to kind of split back to equities because it's just too extreme. And as you said, right, it's tough to call the top because then after that, I mean, prices ran up, gold and silver. And then, I mean, and then they've corrected, right? Very, very sharp corrections last Friday and today. I mean, we're seeing the prices correct today as well. But if you had to take a call, I mean, broadly, not exact or anything, have they topped out for now, especially silver? Silver is the more violent and volatile kind of...
That is what we think. That is what we think.
Yeah.
But can you get it right? That's a question. It's a global commodity. Yeah. Maybe Chinese can decide. I don't know who's going to decide. If you ask our view, yes. And we have been telling people don't invest in silver ETF or in silver fund of funds for the last few months. And people tell us you're bearish. What to do?
So this is
part of our job.
Yeah. If you look at long-term price charts of silver, there is they kind of it does things like what it has done recently. And then for years, it kind of goes sideways. Are we in for something like that? I mean, have you looked at that? Any thoughts, Naren?
We are not experts, but how do you, if you look at Nifty to silver or Nifty to gold ratio, clearly we won, particularly last week, it was clear that one should not invest in silver and gold. People should take out money from silver and gold and put it somewhere else.
Naren, one of the reasons that FIs have given a pass to India despite the expected earnings recovery is that even though in India, say FY27, we get about a 13% kind of earnings growth, you're still getting a 15 to 20% earnings growth expected, say, in emerging markets or even in the broader US markets. So those markets are still attractive. Now that even the budget has not given any concessions to FIs, what is the expected FI behavior to your mind this year?
So why did they invest in earlier years like 2024? So what happens is, we've seen in those years, they were not willing to invest in Brazil and China, which was very cheap at that point of time. And they were overweight India at that point of time. Our view is that, recent past performance does play a role in deciding where money goes. And if you look at India from a one-decade view, I think India represents one of the best structural stories. The challenge for us is particularly people who have been fund managers for long as the markets have not been cheap. If by chance the markets have been cheap, we would want to give a thumping the table buy on equity because everything else is in favor except valuations. And that is the challenge we've been facing. And that's why it's boring for us to tell every time, do asset allocation. But that's what we have been forced to do only on account of valuations. But today valuations across the world is not cheap. And that is why I do agree in the very near term, maybe there are AI stocks which will deliver very good earnings growth, but neither are other markets cheap at this point of time. So I would say that to be maximum underweight today in India at this point of time means that at some point of time in the future, they will have to think of buying. So that is a positive in my opinion.
Naren, do you have a view? I mean, I remember speaking to you on the sidelines of the Global Leadership Summit late last year. You said the big risk for market is this AI thing bursting whenever it happens, right? Any thought, any updated view on that? Will we see a shakeout at some point? Are we there yet?
Yeah, clearly, when you compared AI and precious metals, I thought precious metals had become much more euphoric than AI. If you look at AI, at least many of the stocks had stopped going up in a parabolic move. So, between AI and precious metals, we had to, we always look for the most dangerous areas. So the most dangerous areas in the last 1 month turned out to be precious metal. It is not that AI is cheap. I think AI has still got to go through a correction, but AI is not at this point of time in bubble. It may be extreme valuation, but at least it is not a bubble. And I would say that there is a good room for a meaningful correction in global equity markets. But how much knowledge do I have when I make this statement is something I ask myself. But if I just do simple calculations like market cap to GDP, I think there is scope for a meaningful correction, but we are not experts. And therefore, we believe that if the global equity markets correct, our view is yes. And if they do, I think India should outperform at that point of time. But there is a risk of a global equity market correction in the next 2 years. When it will happen, again, we don't know. It will be nice to know if we could correctly time it, but we wouldn't know.
Okay, all right. Thank you very much for that. Really appreciate your time, and thank you for joining us with that perspective. That's S. Naren with that perspective.